Hello, everybody. So we had a normal day in the market today. The stocks were up 0.6%. The dust is settling. I look forward to a quiet week. Please, no crazy moves. Just time to focus on the stocks and focus on the valuation. And this video today was going to be much more ambitious because there's a lot of stocks that I find cheap right now. And so hopefully over the next few days, I make a few videos where I show you different stocks that I find cheap. So this is one of the first videos like this where I'm going to walk you through some stocks I find cheap. But before I do, I know many of you follow the channel for MicroStrategy, now called Strategy. So Strategy bought, and he bought a little more than I thought. Really, I didn't think he would be able to raise money last week, but he was able to issue common shares. He was able to issue common stock last week, perhaps on that plus 25% a day. That was a wise move. So all of the Bitcoin that he bought, he bought it last week, but he announced it this Monday, right, this morning. All of the Bitcoin announced this morning, 3,000, let's call it 3,500 roughly, at 82,000.6 Bitcoin, 0.6 thousand a piece Bitcoin, so that's a good price. 83K a Bitcoin, 3,500 Bitcoin, that's a good price. I guess he didn't buy the top lately, so that's a good price for him. And note, where did the money come from? Like I said, the money came from the common. It's the common ATM. So there's only $2 billion left on the ATM for the common. He was not ATMing on strike, only on the common. And so what that means is that really that 1.8x NAV is viable for Sailor, and he considers that to be good. I actually agree. I think selling dollar bills for $1.80 is fine, or $1.84 right now is fine. Yeah, it seems like there's a lot of demand for a common. So he's gonna run out of money before next quarter if that doesn't change here. With $2 billion left, my hope is that he starts doing the strike ATM at some point. But for that, the markets need to normalize. The market need to not be in turmoil like they have been this past week. And so I think the markets are going to normalize. I don't know. I hope they're going to normalize, and he's going to be able to raise funds via the strike ATM and not via the dilution of the common, even though to me that's a decent price to do that. Okay, let's move on. Let's talk about the deals. So, topic of this video, deals all over. What are stocks that I find very cheap right now? And let's talk about the first stock that I find very cheap. This stock has dropped. Now it's down 22% from its peak, but at some point it was down more than 30%. Last week Nvidia was down more than 30% from its peak. Nvidia, of which I am now a shareholder, as you know, if you follow me. I jumped back into Nvidia, and I'm very happy about that. So Nvidia today was on the news. They announced a $500 billion investment in the United States over a long term, over the next 4 years, over a 4-year period. And this is in line with things like Foxconn and TSMC having done the same thing in the US. This, for the long-term thesis of Nvidia, is a good thing because it reduces reliance on Taiwan. That's a long-term impact type of thing. Over the short run, I like Nvidia very much because the Blackwell rollout is coming. It's coming this year. At GTC, they've let us know that their focus now is inference. If you follow this sector, you know that was AMD's big bet. Well, AMD's big bet on inference is now going to have a fierce competitor in the form of Nvidia, you know, and Jensen is, of course, the cousin of Lisa Su, which is always fascinating to me to figure that out. The CUDA, Nvidia, why do I love Nvidia? Because they have a CUDA platform, and the CUDA platform is really one of the, I mean, to me, it's the chief underlying reason as to why people stick with Nvidia and as to why more than 90% of the AI workloads are done on Nvidia. It's because of the CUDA platform, which is historic to the company Nvidia, which they have launched, you know, more than 2 decades ago at some point. Nvidia has huge optionality when it comes to embodied AI, training, humanoid robots, and also self-driving. They're going to have huge optionality on that one. So in some sectors of AI, I think Nvidia will be a good competitor to Tesla and will be a second to Tesla, if not the first in some sectors. And so that's why I'm very happy to have exposure, and the exposure that I get it for cheaper than AMD. In the way I value stocks, right? Enterprise value over gross profit over revenue growth, I want that number to be the cheapest. As far as the two leading GPU companies, right? Nvidia and AMD. Nvidia is still cheaper than AMD with a rule of 40. That's not even funny compared to AMD, who barely reaches the rule of 40. I know a lot of people love AMD because it seems cheap relatively, but in my view, when you adjust for growth, there is no beating Nvidia. Nvidia has the superior growth. In my view, I may be wrong. I've been wrong before. I will be wrong again. This channel, this investing style for me, it's about having a 60-40 average, right? If I'm right 60% of the time, the returns are going to be outstanding. That's the way I look at stocks, and I'm fine being wrong 40% of the time. Anyways, SMCI. Let's talk about SMCI. So SMCI, the stock was a Wall Street darling in late 23, early 24. And then, rumors of accounting issues. I don't know where those rumors came from. I don't know what happened. It was a mess. And whenever I hear of accounting issues, I hear of, the market panicking and sense making stops being a thing whenever we bring up accounting issues. The company SMCI has always denied them. They've always denied it, and they were proven right. They got relisted. They got BDO, a new auditor. How many times did the CEO come out and say that this was not the thing? I firmly believe this was a market panic. These rumors were not material. We're supposed to be over with them, but the stock price has never recovered. And even if you look at outdated metrics, for example, like price to earnings ratio, you have Supermicro trading at a 14 times price to earnings ratio. Of course, I believe this is the wrong metric for just about every single stock out there, right? Earnings are to pay taxes. They're not to realize whether a company is cash flowing or not. When I look at SMCI, I see a wonderful company. It's trading at enterprise value divided by revenue of 0.7, so less than 1 time next year's sales. The company is trading at 12 times adjusted EBITDA, 5.8 times forward gross profit. And on enterprise value over gross profit over revenue growth, how much am I paying for that growth? I'm paying a 0.21. This company is dirt cheap. The sector as a whole is not that expensive right now. Of course, SMCI, what is the big story of SMCI? SMCI is Nvidia's friend and partner. Their headquarters are something like 9 minutes drive apart. They're 9 minutes drive apart headquarters, right? CEO of SMCI is Taiwanese. Jensen Huang is Taiwanese. They both speak Taiwanese. They're buddies. They've been following each other in each other's journey for the same amount of time. Both companies are about 30 years old. And SMCI, of course, is the liquid cooling giant. In their last letter, they were claiming something like 75% of a data center being SMCI. If you follow Elon Musk, you know that the XAI data centers are half SMCI, half Dell, and really it's Dell and SMCI who seem to be getting the bunch of the contracts when it comes to the rollout of these liquid-cooled data centers. And so I'm happy to own SMCI. It's a great stock for me, happy to own it. The last stock, which is a stock that I've been adding to the portfolio, it is Nebius. So Nebius is a company that is often compared to CoreWeave, and CoreWeave being the US counterpart or competitor, however you want to call it. The US version of Nebius is CoreWeave, or Nebius is the European version of CoreWeave, is the way you want to put it. But the main difference between Nebius and CoreWeave is, of course, that Nebius is so much less expensive. Nebius secured an Nvidia investments, multi-hundreds of millions of dollars. Nebius, as the former management team of Yandex, the management team of Yandex left Russia. If you know anything about Yandex, it was the big success story of Russia, the Google of Russia. Their top management team left and went to the Netherlands, and they founded this new company with the Netherlands, and they brought assets with them, including a stake in ClickHouse. And I've seen very serious people argue that ClickHouse is the 28% stake they have in ClickHouse is probably worth the entire business of Nebius right now. They are EU-located GPU cloud. They're a provider of GPU cloud in the European Union. Why is that important? Because all compute cannot be in the US. There's plenty of companies that have to compute where they are located. A lot of European AI, a lot of European large companies will need to have that compute be located in Europe. And so that's why it provides some sort of a barrier to entry in the computing world. This business, by the way, is not hypothetical like a lot of Bitcoin miners that have really not done well in the market, not done well, communicating their vision for GPUs. And oftentimes these Bitcoin miners, they're compared to like a Nebius in terms of valuation, etc. But they haven't been as successful as what a Nebius or a CoreWeave has been successful in drawing the demand for the workload. And that's why I could say Nebius could be a specialized AWS for GPU cloud. And that's not entirely a best way to say it, of course, because AWS offers GPUs as well. But they may be a pure play GPU cloud business, and they appear to be extremely competitive, high quality servers, great redundancy, reliable internet, reliable electricity, everything you need for that inference in the future. This is what this company is providing in the EU and CoreWeave in the US. And, when I looked at this stock, when I was analyzing this stock, feel free to look at my deep dive on this stock about 2 months ago. It was trading at $33, and the enterprise value over gross profit over revenue growth was 0.24, and I was finding it cheap back then. So what am I thinking now? Now it's 2.5 times even cheaper than that. And so to me, this is an interesting company. I'm happy to own it. I'm happy to have added to it recently, and I will continue to do so. And the final 2 stocks that I want to talk about today, knowing that there's many, many more deals, right? I haven't forgotten about SoFi. I know there's other stocks that are cheap. There's some miners that I need to talk about that are cheap right now. Bitcoin miners. I haven't forgotten about those, but I'll conclude with these 2 for this video. Celsius. So what did Celsius do? Like Celsius is a beverage company, right? Beverage companies don't export anything because of the value density of a beverage. The beverage has to be made locally. In fact, most of the time, beverages have to be made hyper local. Like you can't make a beverage on one side of the US and ship it on the other side of the US because you don't have enough value density, right? And so this is really a multi-local or a multinational business where multiple local national divisions. Anyways, this business is not that international just yet, although they are having a successful launch in Europe. Celsius is so cheap. It is plain so cheap. Like enterprise value over gross profit over revenue growth is 0.35. This company rule of 40 is at a 59. So check. It's predicted to grow 37% next 12 months. The gross margin is 50%, and I honestly don't see any threat anymore to this business. I just don't. I mean, because they bought the main company that could have been construed to be a threat was Alani Nu, which was the female-only focused energy drink. Celsius is kind of this gender-neutral / maybe slightly more female maybe, but gender-neutral energy drink. Alani Nu was the female-only. Something like 93% of Alani Nu is women drinker. Anyways. The energy drink space, that's the disruption of coffee. In the disruption of coffee, you've had Monster, right? You've had Red Bull and Monster. They go in the red ocean. They do business in the red ocean, extreme sports, tough men who are gonna accomplish crazy things, climb mountains, jump out of space. That's the red ocean, right? Celsius is operating in a blue ocean with next to no competition, right? And that next to no competition is women, is people who say are a little older, but also want to identify with an energy drink. You even have people who are okay drinking Red Bull and Monster at certain time of the day, but in the morning, maybe you don't feel like having a Monster at 6 a.m. or something like that. Monster and Red Bull have an end of day connotation. Anyways, if you study that, it's quite interesting to me. To me, I mean, of course, no financial advice ever on this channel, but to me, the risk is mostly gone at this point. It's an execution story at this point. I was at Walmart the other day, and the energy drink aisle is stocked quite a bit, and Celsius and Alani are going through, and I see what Red Bull is doing, and I see what Monster is doing, and I am sorry, but going after at that market, it's going to take much more than just making the beverage drink pink. Making the beverage pink is not what gets you to sell in that market. I am sorry, it's a little more complex than that. And I think if you follow these companies, they have genuine marketing, and they're really resonating with the consumer. And so to me this business is a home run. So I'm happy to own it. I'm happy to have owned it, and I'm happy to be adding to it. And the last one, and I won't spend much time talking to you about HIMS, but HIMS is still cheap. HIMS is still trading under $30. HIMS is the punching bag of Mr. Market. Poor HIMS. What did HIMS do? What did this whole thing have anything to do with HIMS? Absolutely nothing at all. They're a US-only business. They sell things domestically. They compound their drugs, their pharmaceuticals, they compound them in the US with US-sourced ingredients for the most part. Even if they were to not source the ingredients from the US, what would you have as a problem? Well, you would have no problem because there's no tariff on pharmaceuticals, zero tariff. Even if you had a tariff, this is a company that has a 79% gross margin, so that means your cost of goods sold are going to be very low on that, right? I mean, 20%-ish. But how much of that 20% is the raw ingredients versus the packaging, the box, the mailing. That's kind of a big question here. I would argue even if you slapped 100% tariff on the ingredients that go into these drugs, these ingredients are so dirt cheap they literally cost nothing. Even if you double or triple them, the gross margin would still be in the 70%, in my view. Look up the cost of like metformin or whatever. These molecules are dirt cheap. They're so inexpensive. And this is what, of course, and peptides are one of the easiest molecules to manufacture. So anyways, in my view, this stock has been so unfairly treated by the market, and that's another one that I'm happy to add. So anyways, hopefully this was interesting to you. This is not investment advice, not financial advice. This is only entertainment. I'm hoping you are entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.